He is upgrading those shares today after having a sell rating on them for more than 2 years now. That analyst is Randy Konik, the senior analyst at Jefferies, who covers many of these athleisure and athletic apparel type names. So let's talk a little bit about this.
Yep.
Why you've been a bear for a while, and you've been correct.
Yep.
What exactly was the primary catalyst for why you think that this stock is now upside down?
Look, it all started with a leadership issue with the company. So what we noticed a couple of years ago is the management team was trying to stretch, pun intended, in the wrong directions with the company. They were running out of gas in the core with the leggings product, and they were starting to try to sell non-core products to non-core customers. Teeny boppers with the belt bags, sweaters, logo products, ankle-length skirts that we've talked about in the past. It just didn't work, right? And with that leadership strategy, they kept at it, and they kept telling the market, just believe in us. We're going to give you newness over the next couple of quarters, the next couple of years. It's been a number of years. It just didn't work. The U.S. business is fading. So with the leadership departure today, or announced last night, that's a big positive for the business.
He was getting wrankled by the founder, too, right? Is that right? Or am I imagining that?
Yeah, Chip Wilson.
Yeah. The founder wasn't happy either. So I guess we were on this crusade together.
But meaning, in other words, Lulu has been caught off foot by the fashion, which evidently has shifted to denim and all this. So is it, 50% is a fashion issue, 50% is a leadership issue? How would you kind of like diagnose that? And what do they do now, even with fresh leadership, when they might be off cycle?
So majority of it was a leadership issue. The problem now to get long the stock, which is why we're not buy rated, is that the company is facing very difficult multi-year comparisons. It was the it brand in the it space for the last 5 years. To your point,
like 15 years.
Oh, correct. So now that you're talking about the rise in denim, the rise of jogging pants or more casual wide leg looks, that's not Lululemon's sweet spot. So if they're at these high levels of productivity, it's going to be very difficult for them to kind of get back their mojo and grow again. Their business was down 5% in the U.S. this quarter. That's in comp. That's a problem, and that's not going to return anytime soon. That's why we were able to upgrade, because a leadership change with the wrong leader is the right move. But we're not going to see growth again, I think, until 2027.
Wow. How much of this, though, Kelly, I'm not sure about you. I do own a number of pieces of athleisure.
Because that was the second leg of their story, was the men.
Yes, correct. And I was an early adopter of the ABC pant for golf specifically and everything else, right?
Yep.
But now there are names like Vuori and Rhone and Public Rec, Ministry of Supply. I mean, all of these guys are now basically trying to chip away at market share at Lululemon. That competitive dynamic is only growing fiercer. How does Lulu survive that?
I think it's going to be a problem, because I think where the bulls had talked about Lulu and were bullish, it was on the fact that they thought the brand was fine. But you just brought it up, Dom. They have to compete with these other brands, but they also have to compete with Ralph Lauren, Abercrombie & Fitch, The Gap, H&M, Zara, et cetera, around the world. It's not that easy. That's why, something like Nike, I know we're going to talk about that in a second, they have a better competitive moat than Lululemon.
All right, so let's bring up, because you brought it up, right? Nike reports next week. You have a buy rating on Nike, looking for what is anticipated in your mind to be 70% upside.
It seems to me this is a category even more challenged than Lulu's.
I agree. I mean, this is so crazy. It's been an underperformer for so long.
Yeah.
What exactly then changed for you to say that this is a stock that is now going to be moving higher and troughing out now?
The theme of it's so bad, it's good. Yeah. So, look, we upgraded Nike in the beginning of last year, around February or so. So a little early. But what did we notice? We noticed that the company lost market share. Nike went from selling 1 out of every 4 shoes or sneakers in the world to 1 out of every 5. That's a little bit of market share loss, but it's not existential. So, the company had the wrong CEO. They fired him. They hired back a company veteran, which was the right choice. He came in, fixed the culture right away, and he fixed the playbook with a simplicity of let's fix product and let's balance distribution. He's doing that. Now, the numbers are terrible, but everybody knows it. And unlike Lulu, where we're just at the start of some continued erosion in the U.S. market, Nike's already gone through that. Their operating margins at Nike are cut in half. The earnings per share, cut in half. We're about to see the easiest comparisons in consumer discretionary for Nike against all these other companies going into 2026. That's why you want to buy this stock. And it's the #1 market share in a compelling market of sneakers. It's an easy call.